Hello, everyone. Thank you for joining and welcome to today's webinar, The Life Cycle of a Payment, hosted by ConnectWise. I'm Jess Taveras, an event program manager here at ConnectWise. Before I hand the stage over and introduce our speakers, you might be asking yourself, what is a ConnectWise Event Certified Integration? Our Event Certified Integrations deliver secure, supported, best-in-class, and unique integrations. Event-certified integrators go through an in-depth security process to obtain certification. ConnectWise will also provide Tier 1 help desk support to our partners for any of these certified integrations. Before we get started, I do have a few housekeeping rules. If you can't hear us, try increasing the volume on your device. Also, we recommend using Google Chrome for your internet browser as well. Also, any questions you have throughout, please place them in the Q&A box, and we'll answer those at the end of our presentation. Feel free to click on the reactions and react while we're giving a presentation today. Also, this webinar is being recorded and will be sent to you after the recording and this webinar is completed. Today, I am actually joined by Makieh, our sales executive at Avalara, and Paul, VP and General Manager of Product Management at ConnectWise. I will now hand it off to Makieh. Take it away, Makieh.
Thank you, Jess. All right, so again, my name is Makieh. I'm here with Avalara. And the purpose of me being here is to really just educate you guys on tax compliance and why it's important to really take it seriously, especially in the United States. So there's some facts that I wanted to share with you guys, again, just to emphasize the importance of it. One being that audit uncertainty is actually pretty serious. I mean, 75% of tax professionals have actually admitted that if they were to be audited, most likely they're not going to be compliant. So that obviously tells us this is a concern. The other thing that we want to point out is that it is an increasing source of revenue. Believe it or not, but sales tax is actually the second largest revenue stream for states today. So you best believe states are going to come after you to collect that sales tax. And then, of course, you know, there's so many tax jurisdictions in the United States, and so it makes the whole process very confusing and complex. 69% of accounting firms and professionals have actually said that one of the most confusing parts of our job is truly understanding sales and use tax. So with that being said, Avalara is here to help alleviate these concerns. So to make it a little fun, since Thanksgiving is coming up, we thought we would start with like a quick question, right? So in Alabama, which pumpkin do you think is going to be considered taxable? And I know they don't look identical, but most of these pumpkins are going to be identical. And the question is, you know, well, if we purchase it in a store or if we purchase it by a farmer, which one do we believe is going to be taxable? And the answer is the one that you purchase in the store. Typically, pumpkins that are sold for the use of decoration purposes are going to be considered taxable, even though it's the same pumpkin. There's a few other facts that I wanted to share with you guys. Again, just the complexities, and I think I just went a little too fast, sorry. So a few more points. I have 3 points here that will probably be more in your space, in the MSP space, and first one being canned software in California. Canned software is pre-written software like Microsoft, and if you were to sell canned software in the state of California in a physical or a tangible format, it's considered taxable. If you sell it electronically, it's actually considered exempt, right? So again, highlighting the complexities with sales tax and the rules behind it. Canned software in Maryland, doesn't matter if it's delivered physically or electronically. If it's purchased by an individual, it's going to be taxable. If it's purchased by a business, it's going to be exempt. And now we can look at hardware as servers, for example, in the state of Iowa. Same concept. If it's purchased by an individual, it's going to be taxable. If it's purchased by a business, it's going to be exempt. We added 3 more fun ones just to kind of make it a little more entertaining. But if you look at bagels in the state of New York, believe it or not, if your bagel is sliced, it's taxable. If it's not, then it's exempt. snow removal in the Midwest. I'm in Michigan, so this I always thought was very interesting because it's a service, right? It's a service-based product, or service in general. In the state of Ohio, it's considered taxable. In the state of Illinois, it's actually exempt, same service. And then the takeout in Colorado, which I thought was very interesting. If you purchase a drink that comes with a straw, a cup, and a lid, it's taxable. If it just comes with a cup, it's exempt. So again, highlighting the concept of how sales tax is truly confusing in the United States. Okay, so when we look at sales tax, a lot of people actually think that if you are in a specific zip code, you're going to have one tax rate. And I wanted to actually have this slide on here to point out that that's actually incorrect. There's over 13,000 tax jurisdictions in the U.S. And as you can see, in one zip code, you can have multiple tax rates. So we like to highlight the fact that it's not city-based, it's not zip code-based, and it's actually a lot more complex because there's multiple rates that could be associated to those territories. So we actually go rooftop specific, and that's how we can establish what jurisdiction you're in. And here's another example, right? The zip code of 80111, as you can see, has multiple tax jurisdictions within it. So before we begin, I wanted to explain, or before we get a little deeper, I wanted to explain that there's two forms of nexus typically within the space that you guys are in. There's traditional forms, which is physical nexus, and then there's economic nexus. Physical nexus, and within the name itself, you've got some type of physical presence in that state that now enforces the requirement for you to register and collect and remit sales tax. This could be like an office, a warehouse, even having employees could actually trigger physical nexus. Again, more of a traditional form. In 2018, economic nexus came about, and that's solely based on your sales. So how much you're selling into a state and the number of transactions that are happening could actually impact whether or not you've hit nexus in that state. So, thresholds would be something that you would want to keep up with in terms of economic nexus. What are the 5 steps to managing sales tax compliance? And I'll go into a little more detail on each one in the next few slides, but just real quick, right? Number 1 is we need to understand, where do you need to collect sales tax today, right? What is your nexus footprint? Once we've established that, we'll get you registered for sales tax. Then you got to make sure you're calculating the right sales tax, right? You just saw there's over 13,000 tax jurisdictions, so you just want to make sure you've got the right rate. If you have tax exempt customers, you got to keep up with those tax exemption certs. And then lastly, you want to file and remit those sales tax returns. So number 1, right? Know where your business must collect and remit sales tax. So that would basically be keeping up with your nexus footprint. As you expand into new states, you have to be aware of what these thresholds look like. So again, in the state of Michigan, that's where I'm based out of, the threshold is, there's 2 folds, right? There's sales revenue. If you exceed over $100,000 in sales in the state of Michigan, that's one way of hitting nexus. Or there's the transaction revenue, or transaction threshold, which is a 200 total transactions. I like using candy bars as an example. If you're a candy shop selling online and you sold your candy bars for $1 a piece and you had 200 different customers in the state of Michigan, you've just hit nexus, even though your revenue was only $200. So keeping up with those thresholds is very important in order for you to keep up with nexus laws. Number 2 is obviously, now that you've established that you've had nexus in maybe 3 or 4 states, now you've got to register and collect and then remit sales tax. There's different things that are needed per state, so the requirements in each jurisdiction are going to be different. There might be different forms and processes. Again, required information might differ. So just keeping up with that is also going to be very important. Then number 3, right, was calculating the correct amount of sales tax, which again, there's over 13,000 tax jurisdictions. Each jurisdiction is going to have a different tax rate, right? And different rules associated. So we want to make sure that you've got the right, or the resources, let's say, for you to make sure that you're calculating the right tax on each and every single invoice. This one is one that gets missed a lot, unfortunately, and it typically tends to be the low-hanging fruit for auditors. But making sure that you track and manage your exempt certs is very important. So oftentimes you might be doing business with folks that are, exempt from having to pay sales tax. And in order for that to happen, they have to provide you with an exemption certificate. It's really crucial that you not only make sure that you have the right certificate on file, but that it's constantly valid. There's states like Florida and Texas where those certs are going to expire every year. And you want to make sure that you're keeping up with that. And that's why we say, track and manage those exemptions. Here are a couple questions that come about it as well. So let's say, most or all of your sales are exempt. Do you still need to be registered? And the answer is yes. The short answer is yes. Do I really need to file and remit a $0 return? Short answer is yes. So if you're in this situation and you're not sure and you want to dig a little deeper into these situations, I'm happy to also talk through it with you. And then the last step is to remit your sales tax, right, to the right tax authorities. So once you've collected the sales tax, obviously the state wants you to pay it back. And so you have to make sure that you're keeping up with those remittances. Some states are going to have you set up for monthly filings. Some are going to have you set up for quarterly. Others might be semi-annual, and then some could be annual. So just making sure that you're keeping up with that. Something I want to preface as well, too, is that you should not be collecting sales tax if you're not registered. So if you hit Nexus in a state and you're like, oh, well, now we got to start collecting sales tax, don't do it. You need to make sure that you follow the steps. You need to get registered first. And then from there, you can start collecting and remitting. So now that we've established what the 5 steps are to managing your sales tax compliance, we, Avalara, can come in and help you, right? We can do a Nexus study. So let's say you've been doing business in multiple states and you're like, oh my God, I never thought of collecting sales tax. I just thought I had to do it in the home state that I'm in. That's fine. We can take it a step back and we can do a Nexus study and make sure that, you speak to one of our advisors and understand what your actual Nexus footprint looks like today. So Avalara can support you with a Nexus study. Once we establish where you need to collect sales tax, we'll also do those tax registrations for you. So if you're like, I don't want to deal with all these different documentations and requirements for sales tax registrations, we can do that. We can actually do it through our Avalara licensing team, and we'll get you registered in those states. And there's some perks to some states as well called FSC, streamline sales tax, and I'm happy to explain what those are as well, but just know that Avalara can do it for you. Then now you've got to collect sales tax. Well, Avatax is our main software. I mean, it's been here since the very beginning of Avalara, and that's actually the software that's going to do a tax determination on every single invoice that leaves your company. So what we're going to do is we're going to actually look at the ship to address. Like I told you, we're rooftop specific. So we're going to identify exactly what jurisdiction you're in. We're going to look at the rules that apply to each line item. You might have multiple line items on your invoice that might have different rules associated to it. We're going to do it line by line, and then we're going to establish what those rates are. We take the total amount and then we send it back to you. And this is the integration that we have with ConnectWise today, so that you don't ever have to leave the ConnectWise interface. All that's happening on the back end with Avatax. The other portion that I mentioned, which is the tax exemptions, we have a team that can actually manage those certs for you. They'll run campaigns and reach out to your customer for a new exemption cert if an expiration is coming up, and make sure that nothing falls through the cracks or through the cracks, because we want to, again, make sure that you're compliant throughout the whole process. And then lastly is the remittance. Avalara can go and pay those taxes back to the state on your behalf. So we can actually remit all of your tax returns. So again, the 5 steps, and then how Avalara can support you in each step, taking away one additional pain point from your day-to-day so that you don't have to worry about it.
Fantastic. Look, I think that's amazing to see, Makieh, the strategy around taxes is a real problem. And I'm just going to rewind to this slide because this slide actually stood out to me. I remember when we first spoke about taxes, I've been an MSP, ran an MSP for about 15 years, used ConnectWise, PSA, and CPQ. And taxes in America are complex. Not only that complex, but this screenshot shows one thing that I think not a lot of people truly understand. The same laptop in neighboring addresses could actually attract different taxes. As a user of PSA, I'd have no way of knowing that. I'd have no way of knowing that there's a different tax rate for 7501 Locust Street comparatively to 7495. Neighboring properties that ultimately have different tax rates. So ultimately, the outcome here is going to be if I just collected the standard Colorado sales tax and had no concept around that, just selected it from the drop-down list, I could potentially be collecting not enough sales tax or potentially too much. In the case, I believe the 9.25 might be the standard sales tax in Colorado, 4.75 could be a special economic nexus or some other form of enterprise zone. So as a user of ConnectWise PSA, the integration to Avalara makes sure that the correct tax is calculated based on the address where you're shipping it to. That's the first thing that's most important. So not only do you get the benefit of having direct integration, so when you create the invoice, there's a Get Tax button at the top, click that button and it generates a request to Avalara to validate and then confirm the tax rates that you actually have set. And to me, that's the thing that stands out here is that taxes are complex, but there's tools like Avalara that actually create simplicity. And that's something that I'm a big fan of because I always look for tools and technologies that create simpler and more efficient ways of managing complex solutions like sales tax. And I know that, from my experience, being an Australian and building a business in Australia, we have one tax rate, it's 10% across the board, and pretty much it's everything. So there's very little times where we need to move in and out of tax rates or taxable, not taxable supplies, like whether a bagel is sliced or whether the computer is boxed to a business or not. Like these are the complexities that I don't think you can really manage. And coming back to one of the points that we spoke about prior to the webinar, I'm not sure if you have the number, but how many tax changes have there been in, I think it was the last year. If you remember the number, I was just blown away by that.
Yeah, there was over 100,000 tax changes just last year alone. It's insane. No one can keep up with it. We actually have 300 tax analysts out of our office in North Carolina, and their only job is to update AvaTax all day, every day. So again, when you're working out of your PSA software, you don't have to worry about sales tax and keeping up with those rates because we're built in the back, right? We're integrated, and you can just be rest assured knowing that we're up to date with all the rates and all the laws. But thank you for bringing that up, Paul.
Yeah, look, I think it's important to understand too that 100,000 tax changes, you might be just doing business in California, you could be in Florida, you could be in Ohio. Each one of those has very different taxing strategies, depending on, I guess, all of the factors that form part of the way in which taxes are collected. I think at the start you said the second largest revenue generation for states is sales tax. So the challenge here is going to be how, as a business owner, do you stay compliant out of the eyes of the auditor? Because ultimately there will be a time where you get audited. And I speak to many partners that have been through that pain and they have to come to a point where often there's some form of cost. There's not only a cost through audit, but there's also a cost for the settlement of the sales tax that you didn't correctly remit, you didn't correctly calculate, you didn't correctly determine. Like all of these things really become important to recognize that Avalara helps through the entire life cycle. So the integration is built in two parts. We've got CPQ, which is our quote product that allows you to generate a quote. How is the tax calculated on a quote? And what does that actually mean for the way in which we need to determine tax? Because a quote could be this laptop today, but maybe there's a supply shortage and we need to swap that out to a different laptop, different specification, different amount potentially. And that may not go all the way back through a re-quoting phase. So what happens in the tax inside of CPQ? And I'm going to lead with, what's the difference between estimate and final?
Mm-hmm. So when you are quoting out of CPQ, it's pinging the same source of information that your invoice is going to be pinging. So you'll be getting the same tax rates every single time. Now, you brought up a good point. There are times where maybe one type of laptop is no longer available, so now you have to provide a different type. Typically, laptops, hardware, even software, they're all going to have a similar rule. It doesn't matter if it's a different SKU. It's still going to be identified similarly throughout the entire process. So the tax law that's associated to a laptop, doesn't matter which kind of laptop, typically will stay the same. So the concerns of, well, oh no, we just sent a quote that has a tax rate associated to it for this specific laptop. What are we going to do now? Because now we got to use a different laptop. That concern, I believe, should be something that you shouldn't even be too concerned about. I mean, it's probably going to have the same tax law anyways. And then when you do go into invoicing, it's, again, pinging Avatax, right? So same rules, same laws that the CPQ integration pinged, right? So the concept is that it should all remain the same. Now, if there was a tax change in between the two, then obviously there's going to be a change. But that's probably because you want to stay compliant. At that point, you can explain to the customer, well, it looks like there was a tax law change in between the 2 weeks that we were negotiating or whatever it was.
Could have even been months in the case of some hardware supply challenges partners faced during COVID, obviously.
Right.
So when we think about tax estimates on quotes, is that the amount that we remit to the sales tax entities or the agencies in which we remit sales tax to, or is there a final stage that the sales tax is confirmed for the amount that we might have estimated on a quote compared to what we invoiced the client through PSA?
Exactly. Yeah, no, the concept is that it should be exactly the same. As long as we've got the ship to and we've got the line item, the tax code associated, it should be exactly the same. And I understand how important it is to be super transparent with the quote and to make sure that it matches with the invoice. And that's something that we're very good at doing.
Yeah, excellent. And I think the important piece there is estimates are that until they're final as well, right? Like the concept of the difference between what you calculate and ultimately what is final. The goods and services are supplied on the final invoice. That's what you're invoicing for. That's what the final tax calculation is. So when you remit that to Avalara and set that as final, is that the information that's ultimately used to send to the agency at the end of that sequence of your process there in terms of register, calculate, and track? I'm presuming calculation and the final calculations is what then gets remitted to the agencies, not the estimates that may not even continue through to a final invoice if they don't proceed with a quote, for example.
Yes, yep, it's going to be this final invoice that pings Avatax and then receives the tax line item. Yes, that's absolutely right.
Yeah. And so let's just sort of break it down to two things, because I'm sure there's people on here that are like, well, how does the charging work as a business? Or how does it work if I'm sending hundreds of quotes and maybe only a few of those end up getting, let's say my closing ratio is better than a few. Let's say we have 75 quotes that convert into opportunities and get invoiced. What about the total number of those requests that is sent to Avalara? Are they charged the same as the request for an estimate compared to a final, or is that something that there's a difference there?
Yeah, no, great question. So we're all usage based. Quotes, we look at it as a 1/10 of the usage rate. So if you're sending 75 quotes, then we're going to count that as 7.5 usage, right? If you send 10 quotes, we'll count that as just a 1 usage.
The 1, got it. And then ultimately, if that quote continues to an invoice and then the final tax is calculated, you have a single usage on the finalization of that invoice to complete that. Okay, so that makes sense. So when we calculate the tax estimate, we can collect that as an estimate, and we can actually say through that process that, well, if we did need to make a change and there was a change of amount, let's say, for instance, the cost of the laptop went up due to supply constraints, due to timing, or potentially there's a tax law change, 100,000 tax laws over 365 days, the odds are that that can happen. So I think there's a great opportunity there for you to be, not only to be able to disclose what the estimate is, but also make sure that it's the actual tax that's calculated at the time when those services are supplied. I often have people ask me, obviously, WiseSync and WisePay has been in the ecosystem. Actually, one of the first Invent partners that joined the ConnectWise Invent partnership, I think it was about 2015 or 2016, if my memory serves right. But I remember when Avalara was actually coming into the marketplace as well and solving a big problem, a big pain point for our partners. And we looked at it and said, well, this actually simplifies it as well from an accounting standpoint, because rather than now having to let the accounting system co-calculate, and if we're talking about changes to the tax rates at a rate of 100,000 changes per year, then the chances are that my tax rates in PSA are going to be different to that in my QuickBooks or Xero or whatever I use, which then even creates more confusion, because not only do you have different rates in your PSA, you now need to try and create that connection of making them in sync. And that's something that is time consuming and something that you just saw the screenshot before. Two addresses have different tax rates, and you would never have known that unless you knew exactly and looked up the addresses that form part of that process. So thinking about that journey, what people come to me and say is, well, Paul, QuickBooks Online has automated sales tax. And they ask, is that as good as Avalara? And I'm like, well, how could it be? Because the amount of information that's collected on that invoice doesn't match anything like the information that's collected in ConnectWise, the categorization, the information about the customer, the address, the details, all the information that forms part of that is imperative in the calculation. And I think that's the piece that a lot of people don't realize, that your risk is greatly exposed by not having the right systems. And more importantly, here are two tools that actually help streamline that. So you've got Avalara, PSA, and CPQ really rounding out how that process works. Now, I'm not here to jump on the bandwagon and say how we solve sales tax as WisePay, but actually we help to streamline that process as well. And I think this is where the opportunity for us to truly drive more value to partners is using WisePay to collect that payment up front. And if you caught the IT Nation keynote, you would have seen that we've just released new capabilities, or actually we've just announced new capabilities that are coming out later this quarter, which include the ability to collect upfront payments, including those tax estimates if you use CPQ to generate tax estimates as well. That's going to help to streamline that entire process. And that's for us where we really understand the challenge here is cash flow is critical for business. You can't run a business without it. It's the oxygen of the way businesses survive. And taxes are a natural part of business. So this is something that I think we can really understand how we help to solve this together. So through these tool sets, Avalara calculating taxes, PSA doing the billing and helping you to generate revenue for your business, CPQ obviously before that, helping you to generate quotes and get that new business in the door, but also WisePay helping you get paid. And that's one of the things that ultimately comes back to that life cycle. For those that didn't catch the keynote, I'm going to give you a quick recap right now. The CPQ to PSA to payment to accounting system to reconciliation is a pretty long path. In fact, many businesses say to us it's about 17 steps to go from when we collect the money at the first point in the quote, all the way through to when we reconcile the payment at bank to the actual transaction. It's about 17 steps. So with some changes that we've been able to help PSA guide through this process, we've actually changed that now into one. The step that we now call the fully restricted down payment. And this is a WisePay only functionality. It's something that we've built to actually work with PSA internally. Again, if you're using something separate, if you're using a competitor's product, this is something that's going to change the way in which this whole process is managed. And the way that it works is quite simple. CPQ tax estimate through Avalara will create a 100% a payment request to WisePay. The customer then can pay that invoice via credit card, or they can pay by bank debit through ACH. When that payment is successful, we'll create a fully restricted down payment in the PSA that's going to simplify the entire process. That payment is fully restricted against the project, the sales order, the service ticket, or the agreement that you will create after that quote is accepted. And what makes this really important to understand is you could never do this before. For those that have used down payments, you know that you can't allocate a apply to a down payment once you save it. So you've only got one option to do that, and that's when you first create it, and you can't restrict to something that doesn't yet exist. So that process was completely backwards, and we looked at how we could create a simpler, more efficient way of doing that, and that's what the fully restricted down payment and the quote to cash initiative led by WisePay brings. So if you're not sure as to how that might work, feel free to go onto our website, grab a screenshot or capture of that QR code. That's going to take you through to the quote to cash lifecycle from CPQ using WisePay and PSA. And if you've got a complex requirement, so if you're doing business in multiple states, you've formed that economic nexus to the locations, you can actually, in which you do business, you can use Avalara to help streamline tax collection, more importantly, tax calculation. The registration and remittance of taxes forms part of the services that the team at Avalara offer. So again, jump on and take a look at that. We really think that we help businesses to streamline their cash flow, and with tools like CPQ, PSA, Avalara, and WisePay, I think we create a great harmonious environment for compliance, sales tax management, and more importantly, cash flow, which is king. And I think that's a really great part of that journey forward. Businesses that get paid sooner have better, more prosperous lives in financial management because they've got the cash to do the things that matter, like growing and building your business. If you haven't seen an integration or the WisePay integration before, this is the payment link that is generated from the PSA, so they can click that link. There is also the payment flow from within ConnectWise CPQ. So again, at the point of quote acceptance, the customer can then click, pay and approve, and continue through the WisePay process that you'll just see in a moment. So this process here is using the ConnectWise, and that doesn't look like it is animated, so that's not going to work for anyone. That's okay. It looks like it doesn't display the way I thought it was going to. Not a problem, but basically the outcomes here are quite straightforward. Clicking a link takes you through to the payment screen. That payment screen is really designed
Oh, Paul, I think we lost you.
It looks like we might have lost Paul for a moment. Yeah, he might have had some connectivity.
So good too.
I know, it's the good part of cost and switching. Oh, Paul, are you back with us?
I'm back. I'm back.
Okay, we're handing it back to you.
I'm not sure what happened. It was just the computers, the internet of things got me. Live demos are always great. If you are using a competitive product, this is a great offer. ConnectWise will pay up to $6,500 towards your cost of switching. So if you are using a competitor's product, one of the qualified platforms that we can migrate securely migrate payment information from, go ahead and scan that QR code, jump onto our website and register. The offer ends at the end of December, so you do have some time to register, but more importantly, it is limited. So we do have to limit the amount of free money we're giving away. So if you're looking at shifting across, use that QR code, register on our website, reach out to one of our payment specialists. They'll be able to do even a rate comparison for you so you can see what you're paying and more importantly, ultimately, what you could be saving by using WisePay. We do have a couple of questions from the audience here. So one of the questions is, does the fee from WisePay cover the cost of transactions such as credit cards and ACH? The answer to that is no. We have a very basic fee. In fact, WisePay for PSA starts at $29 a month. Some of our competitors are charging hundreds. So it's very simple to add it to your bundle. If you've got a BMS bundle or if you've got standalone PSA or CPQ, please reach out and have a conversation about that. Transaction fees are of course, based on the volume that you process, the amount, the the total amount of payments that you complete on a monthly basis. So we can give you all that information, and of course that is quite simple. Second question there is, does Avalara need WisePay to function? Absolutely not. It's a standalone integration, works directly with both CPQ and PSA. So you can check out more information on the ConnectWise marketplace. The name was missing for a second there from my mind. Feel free to jump on and check out both the more information for the Avalara and WisePay marketplace tiles there. Over to you, Jess.
Perfect. Thank you so much, Makieh and Paul. Very informative information. It looks like all the questions were answered that we got to as well. Let me just see if there's any more. Let's see. It looks like we have one for you, Makieh. Let's see.
Okay.
Just came one in. Let's see. Can Avalara generate tax estimates at the quote stage?
Yep, absolutely. Yep, and that's the integration with CPQ.
Okay, perfect. And then
You can see there's
right,
one
now,
here.
There's another one that just came in.
More information for how to get in contact with WisePay. The best way to get in contact with us is via our support email address, which is support@wise-sync.com. That goes through to the WiseSync WisePay support team. They're the ones that can definitely help you out for any questions that you have. Another question is, how is cost determined for WisePay? WisePay as an integration is a flat monthly fee. As I mentioned, WisePay for PSA, which is the desktop accounting integration. So that is PSA to QuickBooks Desktop. So using the native built QuickBooks Desktop integration, that starts at $29 a month. So it's very low cost to get started with WisePay. In fact, it's even included if you're on the BMS bundles. So if you're using the BMS bundles, if you don't know what a BMS bundle is, reach out to your account manager at connectwise.com to have a conversation with them about that. They can get you in contact with a payment specialist to talk more about what those, what it would cost you to run payments. Obviously, it's based on how many payments you do. If you're doing one a month or if you're doing several thousand payments a month, the cost will be based on those. One of the key things that we do allow you to do is allow you to manage the pass-through of the credit card surcharges. So if you're looking to pass through a credit card surcharge to your customer, we see that a lot in the US called a fee for cash discount removal, which means that all prices are cash. Unless you pay by card, then there is a convenience fee associated with that payment method.
Perfect, thank you. And it also looks like we have some questions about, can we use WisePay independently without Avalara? Yes, both of these can be used independently. They don't need to be used together. And if you guys have any additional information, Makieh or Paul, you want to add on to that question?
Scan the QR code, reach out. It's
Yep.
probably the best way to describe.
That's the best way. Yep. That's where all the information is.
I just saw one quick note. I think we might have a few seconds. So just
we do. We still have time. Yep.
Does this is this slide moving at the moment, or is that not doing anything?
Looks like it's not working now.
Yeah, it's not working.
It's frozen.
Okay, that's okay. No problems at all. While we've got a few minutes there, I can see there's some more questions coming through. When you hit an economic threshold, are you automatically registered in the state? That's a good one.
Yeah, that is a good one. You are not. You are,
No.
yeah, you have to get registered on your own. So states expect you to do it. And of course, Avalara can help you do that if you prefer that you contract us to do it for you, or you can do it yourself. Mm-hmm.
And I'm going to speak out of turn here, mostly because I've only heard this anecdotally, but I've heard that that's probably one of the most common sales tax collection methods for audits. Would you say that people that don't realize they have Nexus would be probably the ones that have the most tax liability and risk associated with their business?
Yes, absolutely. I mean, most people don't even know what economic nexus is. And so They think that because they're not physically in a state, they don't have to collect or remit. But states know that's not the case, and they will come after you if they see business activity. So just another area, yeah, for you to keep up with.
And that now, economic threshold is that amount based as well? Like it's driven by, like you might sell one laptop into a state, that's not going to create economic nexus.
That's not.
But if you start dealing with a business in that state more frequently, could quite easily happen.
Yeah, I mean, most states thresholds are going to be 100,000 in revenue. So, like you said, I mean, you can realistically be doing business in all states today. It's just when you exceed that threshold that the state has designated, then that's when you need to be registered. There's some states like Alabama and Louisiana where it's 250,000. Texas, New York, California, it's 500,000.
And there you go. There's another classic example of where it's completely different in every different state. So it's up to you.
Exactly.
The onus is on you as the business owner to know that. So without Avalara, it's only going to become more complicated.
Yeah, we do track Nexus thresholds though. So if you are utilizing Avatex, we actually have a Nexus heat map, and we'll keep you in check. We'll actually let you know when you're 80% to Nexus in a state, and then we'll let you know when you actually do hit Nexus. And we'll give you the option, right, to get registered through us or to get registered on your own.
Amazing. And one question here is, if you hit the Nexus threshold in gross sales, but not in taxable sales, is there still a Nexus for taxation?
That's a really great question. So there are some states where, no, that's not the case. And then there are some states where it does not matter if it's an exempt sale, if it's wholesale, if it's retail, it doesn't matter. They just count it all. And that's, again, another complexity.
Yeah.
There's some blogs out there that we have on Avalara on Nexus thresholds that you can definitely read. And like I said, I mean, you can scan, or like Paul said, you can scan and you can reach out to us. We're very big on education. We love explaining and, you know, giving you the resources for you to make better decisions. And then, of course, provide you with resources if needed.
Amazing. And one last question here, I think we have a few moments left, is if I'm selling in multiple channels, do I need to have multiple Avalara solutions? So I presume that's looking at if I'm selling telco services, or if I'm selling hardware and software, or hardware as a service. Like what's the requirement there of the different vertical channels that exist inside of the managed sales environment?
Right. Or possibly even like an e-commerce channel and then a physical channel, or all of that is really not going to matter, because just one Avatex or one Avalara solution is going to be able to address all of those different channels.
Amazing. Well, that's really great too. And again, solidifying the solution here is simple: integration and demystifying sales tax. Again, I was blown away. 100,000 sales tax changes in the last year. Like that is amazing to think that if we had 100,000 sales tax changes, what would the impact be if my business was doing business in 3 or 4 states? It's unknown, because there's 273 sales tax changes a day across the United States. So without thinking about what you need to be across, that's more tickets than anyone would want to have to handle, let alone trying to manage sales tax on top of that. The last thing that has come up here is WisePay included in all levels of BMS suites? If not, which one is it included in? WisePay for PSA is included in all BMS bundles, so all the way through from the basic to the premium package. It is the desktop integration, so that is the WisePay for PSA is payments to the PSA, which then syncs payments via the desktop native integration to QuickBooks Desktop and Great Plains. Feeding into another question is, does this work with Sage Intacct Cloud Solutions? We are working with our another great Invent partner, Dean Doughton, to create an integration to Sage, and they will provide that integration out to payments for Business Central, Intacct Sage, and I believe NetSuite as well, but I could needing to be getting some more information on that one. So yes, there is great opportunity for those that are using other third-party integrations to speak to your integrator about integrating with WisePay for PSA, because we've actually built the system and made it exposed through the API. So even if you've written your own integration like I did back in 2012, writing WiseSync for our own business, you can create that integration to your accounting package by having availability of those APIs. And there may even be a great opportunity for you to build a business like WiseSync and WisePay becoming part of the Invent program and then capitalizing your technology to the world. So thank you again, Makieh and everyone at the Invent team for bringing this together.
Thank you.
Awesome. Of course. Thank you, guys. I really appreciate it today and the collaboration together. As Paul and Makieh have mentioned, scan those QR codes if you're interested in learning more. You guys can also reach out to our Invent team directly at invent@connectwise.com. If you have any other follow-ups, then we will help you and get you to the right place. Thank you, everyone, for joining today, and have a great day.
Thanks, everybody.
Thank you. Bye.